But these kind of longer tail ETF issuers, I don't see a realistic story. I mean, even when BlackRock launched the Ether ETF, it massively underperformed for a long time.
Yeah.
It was really when Ether started rallying this year that the Ether ETF started blowing up to the extent it has today.
And generally, what do you think is going to make the difference between Polymarket and Kalshi for the ultimate winner in this category?
Welcome back to the Rollup.
This is your home to learn from the biggest guests, the brightest minds at the tip of innovation.
Our goal is to help spread the collective knowledge of everyone in our community.
We are breaking crypto out of its echo chamber and taking it to the real world.
Sit back, relax, and enjoy it.
Pleasure to have you on again. I think the last time you were on, we were live from permissionless, if I remember correctly, and you broke the internet with your claim that staking's dead and yields are going to zero.
Yeah, well, that did not happen. Luckily, DATs saved yields, so nominal yields are here to stay as long as DATs are here.
Yeah, maybe that's a good place to start, man. I mean, Tom Lee came out. He said the DAT bubble has burst, and then I had Smokey on yesterday, and he said $110 million DAT for Barachain. We are so back. I mean, it feels like MicroStrategy's kind of tailoring away, tapering off their buys. I did see that there's a new $1 billion DAT coming out of, I think it's Huobi. That should be going live soon. And usually these guys, they announce before they fill their bags. So we should see the execution of that here pretty soon. And then the long tail is just a swath of more of these coming in. What's your take on DAT mania nowadays? Do you think this is still going to have a material impact on liquid markets as we get into the long tail? I mean, how quickly are we going to see these MNAVs go negative?
So the first thing to recognize that a lot of the MNAVs, maybe even more than half of them by number of companies, are negative. Now, the biggest ones are not negative, right? So if you look at Bitmine, you look at MicroStrategy, they are not negative. And the other thing to appreciate about them is that almost all of the trading volume in DATs is just those two names. It's something like 90+% of the trading volume is just MicroStrategy and Bitmine. So you can kind of ignore almost everything else at this point because nothing else is really permeated into retail the way that those two names have. So now that being said, I think it's pretty clear from anybody who's a participant in the market that DAT mania is over from the private side, in the sense that none of these new DATs are getting off the ground. A lot of the fundraisers fell apart. Even the people thought they were going to close. A lot of the commitments are getting pulled. A big part of the reason for this is just that people don't have that much money anymore, to say nothing of the MNAVs themselves compressing, right? So when all these assets are trading at 3, 4x, or even at 2x or even 1.5x, then it's just kind of free money. It's a free money machine. And the way that capitalism works is that if there's a free money machine, people will keep pressing the free money button over and over again until it stops spitting out free money. And it stops spitting out free money. So people stop doing it.
Yeah.
Now, the DATs that currently exist, MicroStrategy and Bitmine, they're somewhere right now between, I think it's like 1.15 and 1.3.
Lower than they've been recently, but they're still positive. Yeah.
Yeah, they're still positive. In the limit, like as long as the MNAV is above 1, it is accretive for you to issue more shares and go buy more of your underlying. So whether it's Bitcoin, whether it's ETH, like it makes sense for you to do it mathematically. And I suspect that both these two assets will keep doing it. And if it trades below NAV, they'll probably stop and take a breather and wait for the market to kind of pull back up and, spend more time talking about the asset than actually going out around and buying the asset. That was inevitable. Like there's just no way that in the limit, these things are going to trade materially above NAV. They can trade a little bit above NAV because of the fact that they're doing this financial engineering, they're staking, they're earning yield through all these other strategies. But them maintaining like 1.5 or even 2x is just mathematically impossible, because they would just keep issuing more shares and keep buying more tokens until like all of the financial assets in the universe are in DATs, or at some point the MNAVs have to go down. Like there are only two options. So I don't think this is an unsurprising outcome, but a lot of the people, I mean, this Barachain one, wasn't it only 50 million? I think that was cash, something like that.
Oh, maybe I saw $110 million in the pipe, but it could have been 50, and then they had to back it with some cash if you contributed in kind. Is what I saw.
Something like that. I don't remember the exact numbers. It was a mix of in kind and cash, yeah, if I recall. And Yeah, for this ETH one, I mean, this is like the Asian one that I think it was like Hashkey, Fenbushi, Sequoia China, now called Hongshan. They were potentially going to get involved in this one. It wouldn't surprise me if that one just never launches because they're just like, hey, look at these MNAVs. They're awful. Even Metaplanet, the one in Japan, has traded down really dramatically over the last couple months. And Metaplanet makes more sense than probably any other data I've ever seen. Because in Japan, a corporate Bitcoin vehicle is actually a tax arbitrage. It's tax advantage relative to just buying Bitcoin because Japan has this like crazy high crypto tax. So if you buy Bitcoin in a corporate shell, it's actually better tax wise. Whereas in the US, it's the other way around. It's worse to buy Bitcoin in MicroStrategy because Bitcoin in MicroStrategy, you pay corporate tax on like all the stuff in payroll taxes and all this other stuff that's like a drag on everything that's happening within the MicroStrategy level. Whereas an ETF is tax advantage. That's why ETFs exist. So there's a lot of weirdness about the fact that this has even worked in the US, and the premiums have been as elevated as they have been. What we're seeing is the market normalizing. It's rationalizing, and that's an inevitable outcome of just capitalism.
Yeah, and mean reversion is one of the things that's just tried and true. These things come back to reality and they normalize out, like you're saying. I think you also brought up the ETFs, and I had James Seifert from Bloomberg come on last week and describe essentially how a lot of these things are chomping at the bit. 150 plus ETFs that are primed to go live, and we're set to go live until the government shut down. Once the government comes back, it's really just a matter of time. These things are inevitably going to go live. But I'm curious, as you're looking at the DAT landscape and you're seeing a little bit of maybe call bull market fatigue, we're not seeing as much demand for these things. Do you think that's also going to carry over to the ETFs? We're not going to see as much pent up demand like we saw when Bitcoin ETH, launched back in 2023, I think, and then ultimately rose a lot in 24, had a ton of demand. We're just going down a long tail. We're not going to see as much demand as maybe we're expecting from these ETFs.
Almost certainly. I mean, so it was actually 2024 that the ETFs launched. So it was just last year, beginning of last year. And if you remember the Bitcoin ETF, when it launched, it was just this rip roaring crazy ride. And then the Ether ETF launched and it was a massive disappointment. And I remember Ether rallied like crazy into the days of the ETF launch. And then after the ETF launched, and people realized like, oh, nobody wants this. It's getting almost no trading volume. Like the inflows are very weak. It just kind of slowly started driving down. And then of course, ETH, the Grayscale Trust, could basically just start selling. It was just massive amounts of selling of the first and biggest ETF. Now, other assets aren't going to have that problem. There's no equivalent of ETH or GBTC for Sol or for XRP or for any of these things. So that dynamic won't be there as there was for the Ether ETF. But the general sense that like, hey, an ETF is this magical moment that retail can finally buy this thing that they wanted. That's kind of what the DATs were supposed to be. The DATs were supposed to be like, hey, what's even easier to buy than ETF? The answer is an equity. So the story of like, okay, there's some access story that the ETF is now opening up the floodgates. Maybe if BlackRock launches an ETF, they'll be able to market this to a broader set of buyers. But these kind of longer tail ETF issuers, I don't see a realistic story. I mean, even when BlackRock launched the Ether ETF, it massively underperformed for a long time. It was really when Ether started rallying this year that the Ether ETF started blowing up to the extent it has today.
Yeah. So just to be a little reductive, I mean, like you said, the grayscale ETH, we don't have that overhang on some of the long tail of ETFs, but again, we're not seeing a lot of the demand. There is fatigue in the market. Do you anticipate that these ETFs they're going to go more like Bitcoin and be a buy the news event, or they're going to go more like ETH and be a sell the news, buy the rumor, sell the news event?
Honestly, my view is that it's neither. I think like when you see these ETF announcements now, the markets aren't even moving.
Yeah.
Like, somebody announces like, oh, they were doing an XRP ETF. XRP moves like 2%.
Right. Right.
It's like it's nothing. And I think the market is correctly discounting that this is not going to be that impactful to the underlying. Now, if BlackRock comes in and they say, hey, everybody, get out of the way, we're launching an XRP ETF, I think the market would react because they understand that BlackRock has distribution and a sales engine that nobody else has for these products. But just having some long tail ETF issuer say, "Great, I'm going to issue a Doge ETF," I don't think people actually believe that's going to move the needle that much.
Yeah, I'm just I like to segue into like what actually moves the needle these days. Is it big names and tariffs Because I'm generally looking at this and I'm seeing the same thing. I'm seeing that we have all this bullish sentiment. Really, I mean, the Fed is hosting a payments conference. There's all of this, it feels bullish. It feels great what to see the level of adoption and generally the Overton window of crypto just open up and everyone is kind of open for business now. But we're not quite seeing the reaction in the market that would warrant or justify these things. Whereas, 6 months ago, a year ago, we would have think every single one of these announcements was the biggest thing since sliced bread. You think it's a matter of fatigue? Is it just where we are in the market? Was it that we were so over levered and we had so much open interest in the market? We needed the wash that we had a couple of weeks ago in order to kind of clear things out and kind of start anew. What if you have your finger on the pulse? You're as much as anyone these days. Just zooming way out, where do you think we are, and what do you think just the vibe is if you're doing a temperature check on the industry?
Look, I'm not going to tell you anything you don't already know, which is that like the fundamentals in crypto have really never been better for any time that I can remember being in this industry.
Yeah.
But animal spirits are
Mhm.
pretty low, right? And so, why is that? One thing, of course, is that the reality is that, especially the flush that happened a couple Fridays ago, the big leverage blowout, um, that like retail is out of money, and retail at the margin is a marginal buyer for a lot of these assets, especially in alts, right? So Bitcoin's holding up okay, and that's the reality is that Bitcoin is the institutional bid. That's where all the institutional money is going. A little bit to Ether, but mostly to Bitcoin,
Mhm.
and everything else is retail. And to the extent that everything else is kind of lagging, it's not really doing that amazing. And the long tail of alts is really dragging. Um, even before the election, like even last summer, alts were higher than they are now, which is weird because last summer Trump wasn't even elected. There were no laws. Government didn't own any crypto. There was no Genius Act. There was no Clarity Act. There was none of this stuff was happening. The Fed was not announcing that they're going to incorporate Fed master accounts for stablecoin issuers or whatever. None of this stuff was even on our bingo cards a year and a half ago, and yet prices were higher. So a lot of this is connected to macro. A lot of it is connected to retail. The fact that retail is just not they just don't have the money.
Mhm.
For the most part, the institutional bid has been holding up the market and retail's been bleeding. And now, why is that? You probably just saw today. Beyond Meat is up 600%. You saw there was some other meme stock that was pumping really hard this morning.
I didn't see. Beyond Meat. I saw was a 14x in the last few weeks. I didn't
That's
see
right.
the other one.
That's right. That's right. I think it was like 600% pre-market or something. It was just so like basically the answer is that the AI bid and the crazy volatility that's coming back to the stock market
Mhm.
is ultimately pulling a lot of the hot money away from crypto.
Mhm.
And where is that hot money going? The answer, of course, in the stock market, there's two assets that retail's trading, which is Bitmine and Strategy,
Mhm.
which means that, none of that money is going to Solana. None of that money is going to, Arbitrum or, whatever, anything further on down the list. So what you're seeing is this tale of two cities, which is that Bitcoin and Ether holding up pretty well, not amazing, but they're holding up pretty well, and everything else is kind of dragging because
Mhm.
that's just not where the hot money is. So I do think that changes. I think this stuff is cyclical, and I don't know that it's that easy to foretell where, when, and how it starts. And so I think for the most part, my advice to investors in the space is just be patient. You have to be
Yeah.
more patient than you think you're supposed to be.
The wait is over. The Talus testnet is live. Be part of the revolution. Join now at testnet.talus.network.
Relay, low fees, lightning speed, and the power of multi-chain at your fingertips. Instant multi-chain payments. Choose any token on any chain. 75 plus networks supported. More than 5 million users. 8 billion plus volume processed. 70 million plus transactions. Fast, reliable, everywhere. Start swapping today. Only on Relay.
Hibachi, provable. Trade perps with speed and security. Earn rewards. Visit hibachi.xyz. Trading on fire.
Yeah, that it feels like sideways is kind of max pain at this point because people are just fatigued.
That's right.
They want to go on vacation, they want to take a holiday, and the market's just not letting them because it's not letting them put on a bid and just hold. But it's also not letting people just cash out because it seems like there's enough substance where there's still things that could happen.
Yeah, that's right. I mean, look, rates are coming down. We know that. There's going to be a new Fed chair within 6 months,
Hmm.
right? And probably whoever Trump puts in there is going to be a let it rip kind of guy.
Hmm.
And so we're going to be in a very different macro environment a year from now. And that almost certainly is going to impact risk assets, right? Because all that money that's sitting in money markets, is sitting in T-bills, that money's coming out and it's got to go somewhere. So crypto is almost certainly going to be one of the places where it goes. Now, how long does that take? When does that happen? I don't know. But that affects both institutions and retail
Yeah.
that have their money locked up in these assets right now.
Yeah, so I'm curious about this because I've started to keep track of macro a little bit more. I love Arthur Hayes. You were on a panel with Arthur Hayes, kind of had a fireside chat with him out in Singapore. I'm curious what your takeaway from macro is because at the 100,000 foot view, it's tariffs, and then it's usually like, okay, do whatever the opposite of the tariff announcement is. But there's a lot more macro money printing that could or could not happen at play here. And you also mentioned the Fed governor situation, whether or not they, Trump takes control of the Fed and he's able to print kind of at his will before May of 2026, or if we're gonna have to wait for that. What's your what's your tabs on macro? Maybe first, was there any takeaways that you had from that conversation with Arthur, or broadly? You had a lot of good panels out in Singapore and Korea. What were some broad takeaways that you had from the Asia conference tour?
I mean, look, my takeaway is always that no one knows anything. We're all basically in the same boat, staring down the same river. And people will say like, "Oh, I can see that there's a curve coming down, and this thing's going to happen. Oh, I know it. That there's a rainbow right around this corner." I don't know. No one knows anything. It's macro, right? Obviously, if the market knew something, it would be priced into the market. So, I tend to not be too bought into people's prognostications about macro beyond the obvious stuff, right? What I mentioned is obvious. What I mentioned is what everybody already knows. I do think in crypto, it is possible to see around the corner with respect to flows, in just the sense that it's difficult for crypto to price a lot of these things in because there isn't that much institutional capital in alts. For Bitcoin, there is. For Ethereum, there is. In alts, there is no marginal buyer who can say like, well, this thing is clearly worth more in 6 months, so let's just bid it up now. There is nobody who has that money to do that.
Mhm.
So that's one of the reasons why I think you can just kind of see far enough down the future, and that's why it's sort of being patient can be an effective strategy with respect to a lot of crypto markets. For Bitcoin, I don't really know that anybody has any alpha at this point. I think it's just like this big Ouija board that we're all playing together and just kind of pulling it as we go. Like it's very unintuitive that you've seen gold
Right.
rocket to all-time highs. Same thing with silver. Silver rallying like crazy. Obviously, there's been a pullback in the last couple of days where gold went from 4,600 down to like 4K. So big pullback in gold, but still massively up on the year. Very very good year for gold. Nowhere near as good of a year for Bitcoin. But if you line up to when Trump got elected, then Bitcoin has outperformed gold over that period of time. But from the beginning of this year, gold's outperformed. That's weird, right? If you think that what's going on, the way that many people in macro describe this is the quote unquote debasement trade, which is okay. The dollar's been weakening. People are moving into harder assets. They're concerned about debt levels, and if you're concerned about debt levels, the natural thing you're going to go into is gold. Maybe that's what's driving this gold trade. The reason why that doesn't really make sense is like, okay, one, Bitcoin's not responding the same way.
Right.
And Bitcoin historically has been this kind of debasement trade. That's classically how it's been marketed.
Mm-hmm.
And then second is that you can also see there's a lot of markets that already exist that anticipate future inflation. And if you're implying that you think that, okay, the dollar is going to debase, that probably means that there's going to be inflation because dollar is going to buy you less. It's going to buy you less eggs and less metal and less houses and less, everything that's what debasement means. And we are not seeing an elevation in future inflation expectations for the dollar. So it seems that people are just bulled up on gold. Maybe it's this more like multipolar world that we're betting on. But then again, Bitcoin should benefit from that. So I think a lot of this stuff is very difficult to understand what the market thinks right now. And that's part of the reason why my answer to most of these things is to just be patient, just chill out. I don't think there's one consistent narrative that explains the whole thing.
Is there anything that you do to help you stay patient on the investing side if you're looking at more venture than you are liquid, or just if you're just taking a break and like zooming out? And what do you do in your free time when you're being patient? You're not taking so much of your time in the market.
Yeah, I mean, look, I'm a VC, so it's kind of a little easy for me to say be patient because that's literally I'm forced to be patient with
Longer
a lot
time
of my
horizon.
investments. Exactly, I have a long time horizon. Now we do also manage some part of the liquid book,
Mhm.
so we do make decisions about liquidity and when we sell things, and obviously, so liquidity. If you're doing crypto, liquidity matters to everybody, and when you get in and out of markets is a universal. So the answer from my perspective is just that, like, look, you're always looking at the delta between fundamentals and prices. And when fundamentals look this good and prices seem not bad, but mediocre,
Mhm.
the answer in every time, like, look, I've been in crypto now for like 8 years. Every single time in the past when I thought, hey, that doesn't look like a great time to exit, the answer was chill. Just
Yeah.
chill, relax. Like, go read a white paper, go learn something, go try out some products that you haven't used before. But like, don't start making panic decisions because eventually the market catches up with fundamentals. It just
Mm.
takes time.
Yeah, got it. I just gonna double down on my question. What do you do in your free time? Like, I totally agree with all your patient mindset, but I am just
Yeah.
curious.
Free time, honestly, I don't have that much free time these days. I kind of work like a dog, but free time that I have, try to work out, try to eat well, spend time with family. I try to go hiking, although the weather is kind of turning now. And just chill, watch a good movie, play a video game. I I don't know. I don't think I'm going to
Classic.
surprise anybody with what I do in my free time.
We're taking it easy. This is what happens. We get bull market fatigue, and then our podcast. We just take a little more laid back.
Yeah, I don't think I have any great advice about how to spend your free time because I anybody who knows me knows that I do not indulge that much in free time, unfortunately.
Okay. Well, in that case, we'll go back to fundamentals here and how they may or may not catch up with price. I think one of the most fundamentally interesting and bullish things that came out just over the last couple of days was this Fed Payments Innovation Conference. I mean, just to see our industry be recognized at a scale like this was incredibly reassuring and encouraging to be kind of taken seriously like this when we all sort of knew what was brewing underneath the surface. Fed Governor Waller announced this skinny master account. You and Dragonfly are very involved in the stablecoin boom that's happening. Is I think a stablecoin super cycle. It's been coined. Um, and so one of the things that came out of this conference was that stablecoin issuing companies could get Fed master accounts or these skinny master accounts at the Fed. What's the significance of this? How could this change the stablecoin landscape by no longer requiring that these stablecoin issuing companies go through intermediaries to get their treasuries or to hold cash?
Um, Candidly, personally, I don't think it's that big of a deal. I mean, I think obviously, as an industry, we're not supposed to say that. We're supposed to say like, "Oh, this is amazing! Thank God that the Fed is finally acknowledging that our industry exists." But I mean, was that the problem with Circle or with Tether? Is that they had to go through somebody else in order to get their hold their treasuries or to hold cash? I think them being directly on the balance sheet of the Fed is more secure, but it's
Mhm.
not like BNY Mellon or State Street or Cantor were not secure. It's not like people were worried about these guys being intermediaries. So I think it's a streamlining. That's nice, but does it really fundamentally change the game? Not really. And of course, like the thing about having these sort of skinny Fed master accounts is that they don't have any yield. So you can't get the overnight Fed funds rate on your cash the same way that a bank can. In
Mm.
which case, like it really is just the same as parking your money at a bank that is actually getting the yield, right? So in some sense, it's actually negative sum to do this
Hmm.
because if you give your cash to, let's say you give it to BNY Mellon, okay, BNY Mellon then goes parks that at the Fed and then earns the overnight rate. If you directly have it in a Fed funds account, or sorry, at a skinny Fed account,
Mhm.
then you're earning zero. Nobody's earning anything on the cash. So it's kind of worse from a net
Right.
perspective. Um, and you can imagine maybe what it does is it gives leverage to Circle to go to BNY Mellon and negotiate more of the overnight rate
Mm.
that BNY Mellon is making because they're saying, look, if you don't offer us some of this, we're going to go just get our own account.
If I'm Bank of New
But
York, I'm telling Circle, like, you're not going to go to the Fed. You're not going to get any more interest over there than we're going to give you here.
right. I mean, I don't know. That's the thing. Yeah, you're right. I don't know that it's going to have that much of an impact at the end of the day. But that's the only thing I can imagine they would have an impact on. Beyond that, I think it's the Fed is being. I think it's going to matter a lot more for fintechs That's the thing I'll say. For fintechs, I think this matters a lot more than for stablecoin issuers. Stablecoin issuers, they don't need the Fed to effect payments for them. Like what they have right now is mostly fine. I think fintechs that basically can circumvent the banking system entirely and don't have to go through bank risk controls and like, hey, I don't like you as a fintech, or I don't think you have enough track record or whatever. If these skinny Fed accounts can just be adopted by fintechs, that's great for fintech innovation. But as far as I understand it, I don't think it has that much of an impact on stablecoins.
The result of this, from my perspective, is that the current banking regime and how we have some too big to fail banks, and we have commercial banks, regional banks. If everyone can go directly to the Fed, this sort of kind of blows the system up. Like, what's the hierarchy once everyone has the opportunity to kind of go direct to the source?
So, to be clear, because you are not going to be earning yield at a Fed master account or a skinny master account, whatever it's called, because you can't earn yield, it is more attractive to you, all things equal, to go through a bank.
Okay.
Because the bank can offer you some yield, right? They're not going to give you the whole yield, but they're going to give you some yield. So they intentionally designed it that they do not want to intermediate commercial banks. That's been the Fed's MO from day one. And it's a part of the reason why the Genius Act does not allow stablecoins to pay yield, is that they do not want to intermediate the banking system. They want to make very, very clear, commercial banks are here to stay. We don't want there to be a big stink. We don't want there to be a big shakeup. We don't want there to be instability. We don't want deposit flight. We want everything to mostly be as it is, and for stablecoins to be this like cute little thing over here. That's what the Fed wants. That's how this whole thing has been designed, right? If you remember, way back in the day, there was this thing called, I think it was called the Bank of Chicago, which was like a narrow bank. And a narrow bank is this idea that you get a bank charter and you open up a bank at the Fed and you create a full reserve bank. So most banks are fractional reserve, meaning they lend out most of the money that they're getting, and at any given time, it's like 30% reserves or something like that. A narrow bank means that all the reserves all the time are sitting at the Fed, and they're just earning the overnight rate, and they're passing the overnight rate back to you. And they were trying to apply for a bank charter from the Fed, and the Fed denied them. This was like in 2018 or something, 2019. Fed denied them, and it was a big kind of brouhaha. And the reason why the Fed denied them is they said, if we offer this, if there is a bank that is allowed to be full reserve and have a bank charter and offer yield, that is going to be so attractive to retail that is going to drain deposits out of the commercial banking system and cause a financial crisis, right? Basically, all the money is going to leave JP Morgan. It's going to leave Goldman Sachs. It's going to leave, Bank of America and Wells Fargo, and it's all going to go into this narrow bank because it's just better, right? It's full reserve. It's completely safe. And they're just passing through the overnight rate. They have no branches. They have no employees. They have no nothing. It's just like this pass through. And the Fed was like, absolutely not. That this will be the end of the American financial system if we do this. So that should be ringing in your ears when you hear about stuff like this. So like, oh, skinny Fed account, how's it going to work? The answer is, of course, no yield.
Right. Okay.
How is stablecoins going to work? No yield.
Right.
The answer is the Fed is willing to do this as long as there's no yield, because that is going to entrench the existing commercial banks for most use cases. Only in cases where it's really cumbersome to go through the commercial banks is it going to be the case that these things are going to be attractive for a fintech or for a new company.
Right. And so for stablecoin issuers, they own the treasury, so they can capture all the yield, and then they can choose to pass it through to the users or not, depending on if they choose to be Genius compliant. And so that creates a large spread here, where if users or consumers are not able to go and make deposits at a narrow bank like Bank of Chicago and get the Fed funds rate, because they have to go sit in their savings account at their regional bank and get 0.001%, then it means it's going to force these companies to go and get treasuries. Is that kind of the case? And that's going to be closed to a certain set of institutions that are able to institutionally custody and hold treasuries. And that is going to create kind of this layered system that we want, so that we can extend credit further and further down the line.
That is basically correct. From the Fed's perspective, they see stablecoins as a product for non-Americans. And if you're a non-American and you can get access to a stablecoin that doesn't pay yield, you don't care. You're like, great, it's $1. That's all I fundamentally want. And so this whole system is really being designed, I think, with that as the mental model for what stablecoins are for and who's going to use them. If it was Americans that are primarily using stablecoins, then a lot of this stuff feels like very anti-consumer, right? A lot of this stuff
Right.
really feels like, hey, why are you making it so that this new product is hobbled and it's unable to compete on a level playing field with other fintech alternatives? If the answer is that, like, well, but this thing is, completely outside the U.S. banking system, these are all incremental owners of U.S. dollars / U.S. debt, then who cares? We're not what's the word I'm looking for? We're not hobbling them, handicapping them. We're not handicapping them with respect to what they might otherwise get access to, because if you're in China, if you're in Japan, if you're in India or whatever, and you're getting USDT, you weren't going to get dollars anyway. So this is your only path to getting dollars, in which case you don't really care about the fact you're not getting yield.
Right. And it's a win-win, because they can get access to the dollar. And then the United States can continue to expand global homogeny of the dollar and dollar dominance, but they don't have to pass on any of the yield. So they can kind of get the best of both worlds. Haseeb, let's switch gears a little bit. Let's talk about this long tail altcoin, good TGE, bad TGE, price rise situation that we've got going on. You should see the chart up there now if you click on the little box. And you commented on this. They put a lot of coins up in the strong TGE half of this plane. When in reality, we could have flooded this graph with weak TGEs that occurred over the last 12 months. And I saw your comments on this was essentially this. It was like, we could have added a lot more coins here and we chose not to. It would have thrown the proportions off a little bit. Are you looking at this and you're thinking to yourself, wow, did we actually have that many strong maybe I'll just ask you, what was your first impression when you see this? And before you look at it too closely, you're looking at this. What's your initial reaction?
I mean, the first reaction is, okay, what's the story this person is trying to tell with this data? I mean, data is maybe a strong word. Like, I don't even know what these lines are. These red lines just seem to be doing random things. But let's ignore that for the moment.
Okay.
And then, okay, look at the axes. Okay, there's like strong TGE versus weak TGE, and there's token is down, token is up, or the axes, right? The y-axis and the x-axis. And okay, so what is a strong TGE? I think what he meant by strong TGE is like hype, that there was a lot of hype around the TGE. That being said, like, a lot of this is a little bit in retrospect, because, did Scroll have hype around the TGE? Yeah, it did. Did Sonic have hype around the TGE? Yeah, it certainly did. So some of these things are a little bit just so stories of like, well, we're kind of memory holding the fact that this was hyped at the time, relative to the fact that it's done well. And then, then you get like Corn and Redstone, or Redstone super hype TGEs compared to those. Like, I don't know. It kind of feels like he had a story to tell, and he decided to tell that story by just moving, this very arbitrary thing of strong versus weak TGE. But fine, let's take this data at face value. Let's assume that it's true. The issue I have with this is that, look, whenever you have data that's this messy, it's always, there's a lot of degrees of freedom, and there's the old line of there's lies, damned lies, and then there's statistics, right? And this is kind of very much in that vein, which is that, look, when you have this many degrees of freedom with your data, there's just a lot of stories you can tell, and it just depends on what story you want to tell, and you can find a way to tell that story. So the story that this person was trying to tell in the tweet alongside this chart was that this strong Big Bang TGE thing is over. These big hyped launches have mostly been failures. And the thing that you really want is to be in the bottom right quadrant. And what is the bottom right quadrant?
Mm-hmm.
Bottom right quadrant were things that had pretty crappy TGEs that hung out for a very, very long time and then eventually blew up. So the two examples are Zora and Virtuals, right? Which Zora and Virtuals both launched with little fanfare. They were relatively small applications and they blew up and got really big. And his the learning that he's supposed to take away from this chart is that's what you should do. You should be like Virtuals or Zora, not have a lot of hype around your TGE, and slowly become this like big, runaway success, and have all your holders participate in that success. And I look at this, I'm just like, this is just obviously stupid. This is extremely stupid advice. Basically, what does it mean? The advice is basically like, okay, launch, be a failure, and then become a sleeper hit. That is not advice. That's not useful advice. Nobody can plan around doing that. If you become a sleeper hit, that's amazing, but that's not a strategy.
Mm-hmm.
There is no such strategy. The second thing, as you pointed out, is that the vast majority of tokens are failures. Vast majority of tokens, there's no hype, there's no nothing. So that bottom left quadrant should have 100x the number of tokens in it, right? Like there's just this gigantic graveyard in the bottom left that he is not pointing at because it doesn't help tell the story that he's trying to tell. And when you do that, it becomes more obvious that the bottom right are outliers. These are not, again, that's not a strategy. You cannot decide to do that. And the top half of the quote unquote strong TGEs, half of them are winners, half of them are losers, which also fails to tell the story that he's trying to tell, which is that obviously strong TGEs are overrated and you should not do a strong TGE.
Do you think he missed anyone? In any quadrant, really, where you want to be is the top right quadrant. You want to have a strong launch. You want to have a strong community, build up, have a lot of demand around the product, and then launch at a fair valuation, a fair float, and ultimately rise from there. Did he leave anyone out of that category in particular? But more like, is there anyone that comes to mind and you think, why are they not here? They clearly had, a terrible TGE or they went down. Anyone that sticks out as being left off the list?
I mean, I'm not gonna call people out for shitty TGEs. I think for strong tokens, it's hard to think of other great example. I mean, SWE, but the SWE TGE was actually a little while ago, and then the run up happened over the last year and a half. So I don't know if you would count that. I don't know when these when the sort of specific date that's set in stone for when these launched. Then of course there's Athena.
Right.
So I don't know about whether they launched. I don't know if he had dates on here, but I don't know if it's like launched the beginning of 24. Maybe is what this chart is meant to convey.
Yeah,
because I think these are mostly 24 launches,
24,
right?
25. Yeah.
Yeah, I think these are mostly 24 launches. So I don't know. But then if you're including like Zora and Virtuals
Zora
and Virtuals have been around for years.
Yeah,
exactly. These have been around for years. So it's a little, again, like you're sort of cherry picking to tell a story you want to tell, which is fine. But it's just like, okay, is that story true? And the argument that I made in my post is that, no, I think the story is actually just wrong. And not just wrong, it's like worse than wrong. It's unhelpful. So if the story you're trying to tell founders is like, don't have hype around your launch, is that really the right advice for a founder? Because the vast majority of things that don't have hype, they die a silent death. They don't even have a chance of getting into the top quadrant or the top right quadrant. And so I think the overall thing, look, I think a lot of people have noticed the vibe shift in tokens and in TGEs, right? And I think in a way, that's what this post is a response to, is the vibe is bad. A lot of these tokens, a lot of these TGEs in the last year have been down. Almost every TGE has been down. And now that's true in large part because alts have been down. Since the beginning of this year. If you remember, alts were rallying like crazy when Trump got elected, and almost everything is down from the beginning of this year. Even Solana, which has had a blockbuster year with respect to fees, is down since the beginning of this year. And so that is the backdrop for looking at this. Any meta stories that look, the beta is down. So if the beta is down, it's not surprising that alts in general are down, or the TGEs in general are down. But the fact that TGEs have been so weak, I think people tend to overdraw conclusions, or they try to find too narrow of stories to explain what's going on. I think people also don't know just general facts about how the distribution of assets works generally. Most IPOs trade down after they're like a year out of IPO. Most people don't know this, but I think it's something like 60% of IPOs are worth less than they were at IPO date. And that's even inclusive of the pop that generally happens during most IPOs, right? Most IPOs trade down. Now, that being said, despite that, IPOs are still profitable on average. Now, why are they profitable on average, even if 60% of them are down a year out from IPO? The answer is because IPOs are power law distributed. Is that a small number of companies end up making a shitload of money and becoming 10x, 15, 20xers. And most companies do okay, and the average company goes down, moderately, right? Tokens are the same way. Is that tokens, if you think about when a token TGEs, it's like 3 years after or 2 years after the project was initially created. That's like a Series A startup.
Yeah.
Normally in startup land, we still consider Series A to be power law distributed, meaning that most things fail, a small number of things do well, and 1 or 2 things are going to knock it out of the park and do amazing.
Right.
And that still applies to tokens when they're TGEing. They're still very much a part of that power law distribution. Now, when you get into the S&P 500, it doesn't look like that anymore, right? The power law collapses and it becomes much more normally distributed.
Mhm.
But at the early stages, the power law, I mean, it's part and parcel of what we do as venture capitalists, is that we have a big portfolio. We understand most of these things are going to go to zero, but a small number of things are going to do really, really well, and they pay for almost everything.
Yeah.
That is how tokens are mostly distributed in normal times.
Even the S&P now, the Bag 7 is just continuing to make most of the gains in the S&P, and it's
That's
just
right.
compounding what you're saying. Um, and so this is the nature of the hyper financialized world that we live in. Price discovery and liquidity is coming earlier and earlier in the capital formation life cycle of a company. And I mean, this is extended. This is even to the nth degree in crypto, where we have pre-markets on Mega ETH that just launched their Sonar round, and now we're getting pre-deposits on Hyperliquid, or excuse me, pre-market perpetuals on Hyperliquid, which is just an incredibly early place to start price discovery and a recipe for incredible volatility. Maybe to wrap up on this chart, what are some of the TGEs that are coming up that don't belong here because they haven't launched yet, but ones that you're most excited about, coming up supposedly in the next 3-6 months? Any of them that are public?
Yeah, so we're investors into Mega ETH and into Monad. Obviously, two big TGEs that the market is very excited about. I'm eager to see how they fare in this market, and I've also told both of those teams that I think it's a great time to launch because markets are depressed, people are down bad, valuations are smaller. I think that's good. That's a healthy thing because it gives you a chance to allow people to participate in the rise as the market gradually recovers. And of course, it's not guaranteed that any of these things are going to go up. You have to actually deliver. You have to actually prove it. You have to actually create something that the market wants. But I think at the end of the day, infrastructure is still one of the most important problems in crypto, is how to just make a better mousetrap, how to make a better blockchain. So those are two of the TGs upcoming that I'm most excited about. I think also the market is most anticipating.
Asset management redefined, built on ERC 7621. Standardize how you launch, manage, and trade on-chain baskets. This is Alvara, the standard for on-chain asset management. Blockchain shortcuts, templates, and widgets. Launch without friction. For builders, by builders. Visit enso.build.
Yeah, it's interesting to hear you describe what good timing looks like, and I think maybe that's the storyline to take out of what you described, because if you're looking for kind of that rise up, that strong TGE with strong community, Monad, Mega ETH both have, then it all comes down to timing. It all comes down to, you want to have that strong community that will continue to grow with you as the market appreciates and compounds from kind of a local low where it was. Okay, the next thing that I wanted to talk to you about, because you guys are investors in Polymarket, and we're big fans of prediction markets on here. Have been. It was one of the first dApps that I found on Ethereum was UMA and Augur, and so the NHL has done deals now with Kalshi and Polymarket. And so, man, the NHL announced both of these guys. They're both claiming to be the official prediction markets partner of the NHL. How can you have an official? I mean, how can both of these guys be the official partner?
I think we are probably going to see a lot of this. So if you remember, the same thing happened a few weeks ago with the South Park prediction markets episode, where they both claimed that we were the first prediction market to ever be listed. We had a South Park episode about us, about Kalshi and about Polymarket. I think these guys, they obviously don't like each other. There's a lot of bad blood between these two companies, and they're both engaged in a very aggressive ground game now about just kind of papering the world with partnerships and deals in order to get as much distribution as possible for a product that's really starting to take off, which is, of course, for in this case, it's sports, and especially domestically in the US, sports betting is a huge market. So it was just announced earlier today as well that Polymarket is going to be the official clearing partner for DraftKings. DraftKings is launching their own prediction markets, and they're using Polymarket for clearing. DraftKings getting into this game now, I mean, it's maybe good to some degree, but DraftKings very clearly a competitor to the three of these, right? Because they're the largest sports betting venue in the US today. I think all of this spells that it's going to be a dogfight. And the market here, we're no longer playing in the kiddie pool. This is not kumbaya crypto stuff. This is like big boy money, serious markets that are very, very cutthroat. And so I expect to see a lot more of this. It's a little silly when you see it happening like this, but look, we've been long-term investors in Polymarket, and I think Shane comes at it with this very crypto native spirit. He's been, you mentioned Augur and Uma. We actually invested into Augur and Uma way back in the day, and so we were there in the very early days when prediction markets were dog shit, did not work, absolutely horrendous products. There was no demand, there was no volume, and Shane was the guy who just grinded it out for the better part of a decade, just because he believed in the story, and he's kind of the guy who made prediction markets a real thing. And so I believe in Shane. I think Shane's going to win. He's right now playing from behind on the U.S. side because, of course, they were targeted by the Biden administration. They had this FBI raid. All of that got resolved and dismissed. I think it was like 3-4 months ago. They had this big investment from ICE, the parent company of the New York Stock Exchange, and now they're re-entering the U.S. market in a fully regulated way with the blessings of the U.S. government. So they got this no action letter from the CFTC, which allows them to come in. But like I said, it's Kalshi is no slouch. Obviously, they've been doing very well with their Robinhood integration, and so now it's like battle of the Titans. And we've got a new third player coming into the game with DraftKings. So I'm very intrigued, but I think at this point it's anyone's game.
Limitless TGE today, kind of a weird one, kind of a stealth launch. They kind of came out of nowhere and did it. Now people are claiming, oh, they sniped their own token, all kinds of shenanigans. Their team,
I saw some tweets about it.
Yeah, they're market makers. They launched without really telling anyone, and then looked like they had one entity that gobbled up a ton of tokens and then started selling the tokens. No one yet knows who this entity is. They suspect the on-chain retail sleuths are suspecting it's the team itself. So we'll see. I'm sure we'll find out more about that. But last question here as we wrap up is what do you think is going to make the difference? How do you think these prediction markets are going to separate from one another? Do you think any of the long tail, Limitless is probably a third at this point, but then there's a whole long tail afterwards. Where do you think a third or longer is going to have any chance at superseding one of Polymarket or Kalshi? And generally, what do you think is going to make the difference between Polymarket and Kalshi for the ultimate winner in this category?
I don't think it's very likely that you're going to get a third unless the third is bringing their own distribution, right? So if you're coming in and you're trying to compete head to head, like directly on the big markets, right? Like on politics, on sports, I think it's pretty tough unless you are a DraftKings, right? You already have your own distribution. You've got your own betting, you've got your own customer base that you're bringing into these markets. And for somebody like DraftKings, the reason why this is so compelling is that right now, sports betting is regulated on a state-by-state basis, and there's about 20 states in the U.S. that ban sports betting. So you're not allowed to offer these products in those 20 states. The prediction markets are CFTC licensed. They're licensed federally. And what that implies is that these prediction markets or these event markets, technically, they should be available in all 50 states. Now, there's been lawsuits filed by, I think, 7 states' attorney general, as well as some Indian tribes against Kalshi for offering these prediction markets on sports in the US, in these states, because Kalshi has claimed we are the first legal sports betting venue that's available in every single state. And it's kind of a reg arb right now. And this reg arb is being challenged by the state attorneys general as well as by these other plaintiffs. We'll see how it plays out. There's obviously going to be lawsuits and fights about whether or not this is legal. And if not, there will be state-by-state regulation, most likely, of prediction markets. If not, somebody's going to get a cut of something. But this is a big part of the reason why DraftKings is so compelled by this, is that they say, look, if this is the way that you are accessing 20 states that we are not allowed to access, we want in. We want to also get into the prediction market game. And that's the exact same thing for Robinhood, right? Why is Robinhood using Kalshi as the back end for their sports betting? The answer is that one license, extremely easy. You don't have to do the state-by-state, state-by-state licensing for sports betting. You can just have one product available everywhere in the U.S., which is exactly the way that Robinhood would like to play it. So there's a lot of legal and regulatory wrangling that's going to take place over the next 12 to 18 months to see how this market is going to play out. And it likely won't be uniform across the entire US. But this market is so big, many really big players are going to want a piece of it. So is some tiny crypto startup that doesn't really have a unique value prop going to be able to sneak a word in edgewise? I don't think so. But if you have a unique angle, if you have some unique mechanic, if you have some unique innovation, then I think plausibly, right? So it really is more about innovation, like coming up with something new, than it is I'm just another prediction market. Am I going to be able to, it's like saying, well, are you going to be able to create a new exchange to compete with Coinbase?
Yeah.
It's like at this point, no, not really.
Right. This is where user-generated markets could get really interesting if someone cracks that. And right now, it seems like there's still not a way to really do that. You need discoverability. You need liquidity across all of these markets. Things get duplicated. You end up with regulatory hurdles where people create assassination markets or all these wonky kinds of things. But if there's a prediction market that does crack it, and maybe it looks like you have to stake a token or some sort of cash requirement in order to list, that feels like everyone can kind of suspect that's where prediction markets are going, but no one's been able to crack that nut just yet.
Yeah. So I'm pretty skeptical of this story. I think this is one of the oldest and most obvious ideas in prediction markets, and there's a reason why it doesn't exist, which is that in theory it sounds good, in practice it's a horrible experience, which is just that users learn that they cannot trust the markets that they see in front of them. They learn that some of these markets are scams. I mean, do you remember the what was it? Suitgate, the thing about Zelensky wearing a suit, and there was this gigantic, like that was like it was a genuinely innocent disagreement about whether or not this market should resolve yes or no, did Zelensky wear a suit, and there was such an enormous uproar over this market, right? And that's not even a scam. Nobody was getting scammed, right? It was just genuinely a dispute. If you are getting rug pulls in markets, you're getting fake oracles, you're getting people who are setting up markets and manipulating them, or they have direct control over the outcome because they're betting on something that they themselves control. People lose trust. They get extremely mad. They get away. They run away from the platform. They say, fuck this place, never coming back. You just learn this very quickly. It's the reason why, you could think of, okay, why don't you just create an exchange to outcompete Coinbase that just lists everything? The answer, I'll tell you, very, very obvious, is oldest idea in history of exchanges. The answer why is because there's a lot of tokens that are just rug pulls. And if you list them, your users will lose money. They'll get really mad. They'll never come back. And so people learn, it's like, it's not even about, I need like this regulatory cover. I need to make sure that I don't list securities. A lot of it is I need to make sure I don't list tokens that just go straight down, because my users are going to be upset and they're not going to come back.
I think that's a great way to sign off. Don't list coins that go straight down. And how about, hey, founders, don't make coins or build projects that go straight down. Haseeb,
that's right.
The VC,
that's right.
you don't want to invest in those. Thank you so much, Haseeb, for coming on.
Right.
It's always
that's
a
right.
pleasure.
All right. Great to be here. Take it easy.